Okay, recording this video on Thursday, the 18th of February 2021, just gone 5:49 p.m. Chicago time. Do hope you are doing well. So today for me was one of those days when you go, dang, this trade is just not working out. I have to get out and do something different. And what makes it even worse was there were two other trades that set up when I took this original trade that have worked out just beautifully. So today, kind of midweek chart review, going to review the poor choice of trade that I made, which was in soybeans at the beginning of February, and the two trades I should have taken instead, crude and copper. And then what I've done today in order to try and fix the situation and take a better trade that is setting up at the moment, which is in the euro, and we're going to talk about the dollar index and gold as well at the end of this video. But anyway, so soybeans, and I took this trade at the beginning of the month because we had a little bit of a setup. In my trading, what I'm doing is I'm taking longer term positions. I'm still day trading a little bit on my E-mini trades, in and out when I see nice trades kind of setting up. But I'm also interested in holding those kind of overnight, maybe 2-3 day trades sometimes when they kind of work out well. I want to keep enough capital available to do a nice E-mini trade, which leaves me room in the whole scheme of things for me to take two other trades maximum at a time. And usually what I like to do is to have one Forex trade on and then to have one commodities trade on. And I'm pretty open-minded about the commodities. I'm not just looking at, the big ones, gold, silver, crude oil, and so on. Also looking at things like orange juice, soybeans, wheat, corn, cocoa, whole range of different things. So I've got about, I suppose, over 12 or so different options there on one side of things, and about 4 or 5 different options on the Forex charts. But anyway, so I'm going to walk you through the soybeans trade that I took and why I shouldn't have taken it. So usual chart setup with the two charts side by side, both with the better indicators on. On the right-hand side, we have beta sine wave here below the price bars, which calculates the cyclical activity in 3 different time frames. That allows me to plot support and resistance lines on the price bars themselves. The little light bars are the lowest time frame. The really solid lines are the highest time frame. And then when we get breaks of support and resistance, those show me trend breaks. And I mark the trends, uptrends in red, downtrends in white. I actually had an email the other day, someone saying, why do you use red for up and white for down? Seems illogical. I know, like looking back on it, it does seem illogical, but you choose colors at the beginning of your career, you kind of get used to that, set in your ways a little bit, and I'm used to looking at those colors and reading them in that particular way. The reason I didn't go with green is because green, for an uptrend, for example, is because green is the default color for a lot of just standard bar coloring, and it looks very good on a black background. But in retrospect, I would probably kind of change those choices. Anyway, so on the right hand side, better sine wave. On the left hand side, the two indicators to do with volume. We've got better momentum below the price bars, which is a volume based momentum calculation. And then on the price bars themselves, we have better pro-am, which uses the average trade size to identify professional and amateur activity. Professional bars are in blue, amateur bars are in yellow. When both the volume and the price indicators are moving in sync, for uptrends we paint the background red, for downtrends we paint the background this grey color. So here we go. This is the setup for soybeans, and I've left my kind of little system signals on the chart themselves to illustrate this one. This is what the signal I took, which is the beginning of February, and I call it a bouncing ball. When the market's in an uptrend and I'm looking for a long trade, the signal is called a bouncing ball. When the market is in a downtrend, I'm looking for a short trade, and the mirror image of that bouncing ball is called an under the lip pattern. We've talked about this over the last few weeks. This is a classic kind of under the lip type trade where we've broken into some weakness. We've come back up under the lip. I talk about this trailing stop kind of coming back down, being under the lip. Amateur bars up, and we're kind of rolling over, and that's under the lip. But the beginning of February, this was setting up for a bouncing ball trade because we'd had some weakness. We'd seemingly bottomed here, blue professional bars kind of come in, and then we come back down to test into that, and that's where the bouncing ball signal kind of goes off. So it's on this move down here. I actually think, I'm not sure whether I was in on this bar or this sequence here. I think I was just in this sequence here, 1st of February, something like that, down on that trade. And initially the trade kind of works quite nicely, kind of goes in my favor. I'm thinking all good. There's nothing here to suggest, that there's profit taking going on by professionals. It's not weak because it's no amateur up bars at this stage. So this trade's going quite nicely for me. So add to my position as we're kind of making new highs. And then the next thing that happens, this thing just falls out of bed. Blue bars kind of step in at this point here, and we actually move past the lows of those blue bars, and I'm thinking, well, maybe I'm okay there. They came in and held it at this point here. They've held it here, and we've come back up quickly. Luckily, I didn't get stopped out at this point here, but it was close. We come back up, and I'm like, where's this going? This is, not clear to me what the trend is. And then last couple of days, all we've been doing is pushing up with amateur up bars. And then with today's activity, we get an under the lip kind of signal going off here. So not looking good. I've not gone short at this point, but I've exited my long trade, having sat through a lot of jiggery pokery on the upside and the downside. And yeah, emotionally that's hard, especially when you got some good money in the bag, and then it kind of goes all the way the other direction. And it's kind of, particularly when I've added to my position, that ain't good. So why did I take that trade, and did I make a mistake? One of the reasons why I took that trade was because I didn't think, soybeans has been on an absolute tear for 6 months, and I didn't think this whole trend was over, despite being there's some signals being that we've gone quite a long way and it was just time for a little bit of a pause. This thing set off in September, October time here when we broke into a confirmed uptrend. You can see here plotted in red, whole bunch of blue professional bars and exhaustion buying. That's getting the move going. Okay, so this thing had been basing and bottoming for a long time, and then all of a sudden Rambo patterns at the bottom, so amateurs going short at that point, absolutely the wrong thing to do. The market starts to rally, and then the professionals say, hey, we need to get on board this thing. They buy it on the breakout, and on this retrace here, you can see all these blue professional bars going on the way down, and we break above the highs of that. That's a strong uptrend. But for this uptrend to be over, what I need to see is kind of the reverse of that. I need to see a whole bunch of exhaustion, blue professional bars at the highs. This is getting the move going. All of that volume has to take profits and get out at the highs up here, and we've not seen that yet. And so everything's saying, well, we've still got some strength going on here, despite there being, some form of exhaustion. We've got an resistance on the highest time frame, pullback to end of trend. With this latter bit of activity, with today's activity, we've actually put in another little pullback to end of trend signal there, just a tight one underneath this kind of resistance here. So for the time being, it's kind of gone as far as it's going to go, I think. But in my mind, we still haven't seen all of that activity to say that the end is over, this uptrend is over in soybeans, because no blue professional bars at the highs, no exhaustion buying. So that's why I was still interested in taking a long trade in soybeans, although it's pretty late in the day. But there's one pattern that I didn't pay enough attention to, and it shows why the other trades were better than this one, and I shouldn't have taken this long trade. And it's this activity here on this 4,000 tip bar chart. So going into those highs at that point there, we had blue professional up bars, a whole series of them with exhaustion buy at that point. So that shows profit taking up here into this 1440 kind of level, from which we then have a bearish divergence signal, and then we drop off pretty sharply after that. That is really important because it shows at this point here that the professionals had really taken quite a lot of profits here, and we didn't have enough activity on the way down at this point here to have a whole family of blue professional bars and exhaustion signal on the lows here. This is maybe just getting this move going as a retrace here. So this is the pattern that I should have paid far more attention to while getting into a long trade at this point, because that's not good. That's showing weakness up those highs. And I'll show you the other two trades that I could have taken, should have taken, and they do not have this same pattern. So the first one is crude, and we had on the 15,000 tip bar chart, crude trades a lot of volume, so we need to crank it up in terms of the tip bar chart settings. That was happening at the beginning of February, exactly the same kind of signal, a bouncing ball signal happening there in crude at 52, and we've had just a great rally in crude ever since. So let's back it down to the signal here. Beginning of February, that's where the bouncing ball signal kind of comes in. We've had a break into an uptrend. We come back down and test the uptrend at that point. You'll notice there's no particular amateur down bars or any kind of testing going on at that point there. But what was important is that this rise here into the highs up to 54 at that time, we didn't have blue professional bars into those highs. We didn't have exhaustion buying. We had some exhaustion buying prior, but at that point there, we had not seen a blow-off move with blue professional up bars into those highs. And so all we did at that point was just settle down at between 52, 54, ready for that next move up, the next bouncing ball kind of signal to take us up to these highs. So in retrospect, that was a far, far better trade than the soybeans trade. Similarly, on copper, again, same thing. This is a 5,000 tip bar chart on copper. Doesn't trade as many contracts, but it's still a nicely traded futures market. Beginning of February, there we go. That's a bouncing ball set up there. We've broken into an uptrend. We come back down to test, and let's see if we can see the same kind of patterns kind of going on. No particular testing amateur down bars or anything like that, though. A nice little blue professional bar kind of comes in a little bit of weakness, but we immediately break above the highs of that pretty quickly, and then we're away to the upside. And then similarly, again to the crude pattern, we'd been settling down from these highs, but we had not had blue professional bars. Yep, there was an exhaustion pattern, so we got kind of exhausted, but no blue professional bars into those highs taking profits. A little bit here and so on, but it wasn't as clear cut as the soybeans chart, where we got a real blow-off move with blue professional bars. So there's a difference in the character between the two. With soybeans, we'd had professional activity taking profits at those highs, but in crude and in copper, we'd not seen that yet. So, what is that, 2 weeks later, I'm kind of kicking myself saying I've been sat in this trade for way too long, and I should have taken two other positions instead that have worked out. Either of those two would have been just fantastic trades. Now, let's see if soybeans works out for a short trade. What we need is kind of a confirmed downtrend going on here when we break below this support that's come in with today's activity. Let's see what that does. I think that's looking good for a reversal trade, but to be honest, mentally I'm just a little bit sick and tired of soybeans. So for the time being, I'm not going to touch them, but I'll be interested to see how that works out with tomorrow's activity particularly. So copper and crude. What I've done instead, though, today was we had a long signal in the euro. And this is kind of counter what I was talking about a couple of days ago, where I'm seeing kind of strength in the dollar index. The dollar index just doesn't want to go right now, so I'll show you that chart. We've got some blue professional bars kind of stepped in the beginning of the month, beginning of January, and we kind of rolled to the upside. We've had a stair step, kind of a couple of signals. Blue professional bars step in here, and it moved nicely up to 91.50. So I was making good money here, but Rambo patterns kind of came in, and then we've had weakness ever since. But you can see on a cyclical pattern that we've come into resistance on the highest time frame. It's a pullback signal down here, and we've weakened ever since. And although that was good for a nice little setup, you can see that's the bouncing ball kind of signal there into those highs coming in at this point here. It's just not right for a re-entry. We need to play this move out with pullback to end of trend on the highest time frame, and before it's all over on the downside, I think we need to see some proper exhaustion selling on blue professional bars kind of down here. All the professionals have done at this point here is just game it up at this point, and now we've got to see another kind of sell-off in dollar index to test those lows and for that cyclical pattern to play out, pullback to end of trend. In my mind, everything needs to come together. The cycles need to come together, professional bars need to come together, and the volume momentum needs to come together. It's the combination of the three non-correlated indicators that gives us the highest probability trades. So, although I'm kind of bullish medium to long term on the dollar index, we haven't made that pattern yet for a real kind of change in trend. In the meantime, though, we do on the euro have the makings of a little bit of a rally trade kind of going on. So a few days ago, talked about we had a U-turn here, blue professional down bars, blue professional up bars at that point. They're kind of forcing the market down at that point and then buying everything in stack, and that causes the blue professional bars to signal on both sides of this kind of V reversal here. But got pushed to the other side pretty quickly with the Rambo pattern here, so the amateur's getting involved at this point and it weakens from there. But when we come back down to test those lows, what do you know? Blue professional bar kind of steps in. That's a stair-step trade. Blue professional bars coming in, we hold, we immediately rally, which is really nice. I like it when the stair-step trade works out within a couple of bars. We're breaking the highs of those blue professional bars. We kind of keep going. Also happens to be a bouncing ball signal going on here. So we've come back down to test into those lows, and it's just signaled at that point there. So instead of being long dollar index, which I was a couple of weeks ago, I'm now long euro and out of the soybeans trade. I'm looking for another kind of commodity trade to put on, but I don't see one kind of lining up directly yet. So that's the story of one failed trade and what I should have been more conscious of, and two missed opportunities that actually set up as great trades. Now, one of the other trades that I talked about in the last week's video, was gold. And actually, the little bit of strength that we saw in gold with blue professional up bars at this point here, potentially we had exhaustion sell blue professional bars stepping in here, professionals at this point here. We race away with Rambo patterns. And I was thinking when we came back down to that stair step trade there, kind of goes off. But do you see what I mean? When it doesn't immediately break above the highs of those blue professional bars, that's not a good sign. And so we had some weakness from there. Blue professional bars kind of come in again. And at that point, the professionals are selling it down. We got a confirmed downtrend. And what do you know? It happens to be an under the lip trade here. So once again, because all my capital was taken up in two trades that were going nowhere, I missed this one as well. So kind of kicking myself on that. So a bit of a story of poor trading and missed opportunities. But as long as I review my charts and learn something from it and then incorporate it in my trading going forward, I think of it as all being good experience. Anyway, hope your trading is going well.